Good afternoon, everybody. Andy Pedraza here with Special Effects Academy on the start of the week session for September 30th of 2018. Month end, quarter end, everything but year end. So we're going to go through our usual agenda. The prior week, currency strength meter, fundamental announcements, major peers analysis, any setups in progress, and boy, do we have a few of those, and our parting words. We'll start out with the long-term ledger. We had a bit of a rough week with the USD Swiss trade closing against us by about 175 pips, and we did open a few trades. On the positive side, we had a significant gap on the open of the week, and that last trade that you see on the screen, the pound Canadian, is now about 275 pips in our favor, with 225 of those pips protected. So that one trade is already covering the loss on the USD Swiss and then some. And on top of that, the other trades that are open, the Aussie CAD, the USD JPY, they are all carrying profit as well. The only one still carrying a negative is the Euro Pound, which is going against us by about 100 pips, give or take, on simply the fact that both the Euro and the Pound have been weakening at about the same rates. And prior to that, the Pound did strengthen significantly. So it has gone against us again by about 100 pips. So overall, the long-term account is quite healthy right now and really doesn't have much of a shot of going against us thanks to the pips that are protected on really all the trades that are at profit right now, not just pound CAD, but also the USD JPY and the Aussie Canadian. We do expect the Canadian to continue strengthening, but we'll cover that when we get to the charts and the setups. For now, that is your long-term view, or long-term ledger, rather. On the short term, we had a less than stellar week yet again. The market's been going in both directions, so it dropped 5% in this week's trading. However, the two trades that are on the screen still open, Aussie JPY and EuroCAD, are both carrying profit right now. So some of that has already been recovered, but that was the end of the week, and as usual, we do report the real trades and real results, and it is what it is. So last week was a loser, but this week is already painting as not just a recovery week, but probably a home run week. Notes and opportunities for improvement. It was a tough month. September was just plain horrible as the pairs went in both directions, and we'll take a look at that when we look at the next slide with the currency strength meter. And it was a tough week as well, though we did have a pretty nice recovery towards the end, which, as I mentioned, is not in the actual ledger as realized because those trades are still open. So it really won't be realized until this week or perhaps even beyond. As you know, our approach, we're in no rush to close profitable trades. If those trades are still moving in our favor, we'll continue keeping them open for as long as they continue making profit. But if anything starts retracing to any significant degree, we will take the profit off the table and bank it. Trades remaining open on the short-term account, the Aussie JPY long and the EuroCAD short, which you saw in the prior screen. Now, our relative strength meter for the week that just ended, and I did something different this time because it is month end. So on the left side of the screen, you're seeing the change in strength for the entire month. That is a 30-day view. So here's something that I want to point out. The volatility, the change in value for the entire month of September was 3.42%. Yet last week alone, we had in excess of 5% movement in the Forex, which again highlights the fact that the market has been going in both directions. So that's how you can have the monthly volatility lower than the weekly volatility, because it has been moving in both directions and the net change has been 3.5%. But every single week of the month, was really high volatility just in different directions. So it would go up one week, go down the next week, up the next, down the next, and so on. So that, of course, did affect our trading, as I pointed out in the last couple of charts. But we are now in a pretty decent position with the trades that we have open. Let's take a look at the entire month first. The screen on the left, or the graphic on the left, we can see that the Canadian was a clear winner. So the Canadian over the month appreciated against everybody. Again, by no more than 3.42% at its steepest, which would have been the JPY. The Swiss was the clear loser, and most of the losses of the Swiss happened last week. The Swiss was actually having a pretty good month, and then last week it went in reverse. The pound was also a clear winner against everybody except the Canadian. So we had the pound gaining strength and is now sort of teetering in a sideways fashion and probably poised to drop. That would be my expectation, but we don't trade on expectations. We trade on whatever the market is doing. So we'll wait for that move to happen. The yen was the clear loser for the entire month. It lost value against everything else out there. Completely bottom of the pack, the opposite of the Canadian. And the rest of them, as you can see, the Aussie, the Euro, the pound to some degree, as I said, it did appreciate against almost everyone. The others were pretty middle of the pack. The Aussie, the Kiwi, the dollar went up, went down, but basically did not appreciate against everybody or depreciate against everybody. Silver did pretty well for the month. It rose against everybody except the Canadian. And gold had the opposite. It dropped against everybody except the Swiss and the JPY, which, as we noted, both of these currencies had a pretty tough month. For the week that just ended, a lot of volatility. It just went in both directions, but the clear losers were the Swiss, which, as I said, lost most of its value in just this past week. The Canadian gained quite a lot on news of, well, not on news, but on oil price rising, as well as the expectation that a trade deal with the U.S. is very close to being signed. In fact, they have a deadline tonight that they are still trying to meet. They've been negotiating throughout the weekend. If they do not make that deadline, it's not the end of the world. The analysis everybody has been saying, pointing out that there is nothing preventing the deal from being signed next week, the week after. There is no hard deadline where people walk away and say, okay, then we're not dealing with you. It's simply going to go beyond the soft deadline that was put in place. And that deadline, the purpose of it was to hopefully put out a three-way trade agreement between Mexico, Canada, and the U.S., the equivalent of NAFTA, North American Free Trade Agreement, which is Trump's renegotiation of that entire deal. So if the Canadians missed the deadline, or if both of us missed the deadline, it's really not the end of the world. They'll simply continue negotiating. But it would be a lot more impressive for everybody involved, beneficial, if an agreement is actually signed today before the soft deadline. So that's the Canadian. The Swiss, as I noted, a terrible week. The euro also had a pretty bad week. The pound was middle of the pack. The yen, as also pointed out, dropped a lot this week. And in fact, we're trading it into yen weakness as we speak. Kiwi, middle of the pack. Dollar did gain against everybody except the Canadian. And you see that silver had a brilliant week, and gold, again, middle of the pack. Fundamental announcements for the week. It is the first week of the month, first week of October. So, of course, we're going to have the non-farm payroll on Friday. That's always the first Friday of every month. It also dovetails with the Canadian equivalent. At the same exact time, same exact day, we're going to have the Canadian equivalent of the non-farm, their change in employment and the unemployment rate. We will, of course, be trading that one live. On Tuesday, at a little bit past midnight, well, half an hour past midnight, we have the Reserve Bank of Australia interest rate position. So that will also be a live trade. We'll be opening up the trading room that day at around midnight Eastern Daylight Time to trade that one. I'm not sure yet if that's going to replace the 8 p.m. or if it will be an additional session. We'll figure that out at some point tomorrow. But that is what we are looking at for fundamentals. So a pretty light week in number of fundamentals, but the ones that are coming out are pretty high impact. One interest rate decision and two unemployment or employment rather changes from the U.S. and Canada. And with that, we move over into the charts. Did anyone have any comments or questions before I start looking at the charts? Okay. Then looking at the euro dollar, we can see that the euro dollar was doing a significant retracement into dollar weakness, and the last couple of days have undone just about 2 or 3 weeks worth of gain that the euro had over the dollar. It is now, price is now sitting right at the support level indicated by the Ichimoku cloud. And we, of course, would be waiting to see if we're going to have a bounce or a piercing of that level of support and trade it accordingly. There are pretty good opportunities in either direction, but we're going to wait to see which way it jumps. Pound dollar, same thing. We had a really nice recovery out of the pound, moving into pound strength, dollar weakness. It did manage to pierce the cloud, and now it is sitting right at the level of support indicated by the cloud. It gave up a bunch of gains over the past week that it had taken it quite at least a couple of weeks to make in the other direction. So it went up very, well, I wouldn't say slowly. It actually went up quickly, but it went down even quicker. It has not gone back down to the bottom. We'll cover the outlook for the pound when we get to the setups in progress in one of the later screens. But of course, you know my view on that. Brexit is going to be weighing heavily on the pound. And of course, the U.S. is caught in whatever the news cycle says. So this is not a given that this pair will drop, but a very high likelihood nonetheless. USD/JPY has broken through a level of resistance at the top, making a new high. And that, of course, prompted us to enter into a long-term trade late in the week. We did catch most of the movement of this pair above once it broke that high, we did enter that trade and we picked up however many pips. I think we're like at 70 pips and counting on that pair, or at least 60. And that is where it is right now. If the trend obviously continues, we would expect to get even more gain out of that one. So that is an open long-term trade. USD Canadian, it has been moving very, very sideways for months. It went into the sideways channel, I would say somewhere around May of this year. It's gone up towards the top, down to the bottom, back to the middle, and now back to the bottom. So it is sitting at a key level of support. But as I said, we're seeing very good opportunities for Canadian strength coming back into the market. I'm already short on a couple of Canadian pairs, and if this one breaks that level of support, which it might have already done it on the open of the week, I will be entering a long-term trade on the USD Canadian, trading it as far down as it wants to go. USD Swiss, this was the disappointment of the week and of the month. We were trading it down. We'd already taken some profit out of this pair, and we had re-entered that trade, and it did take us out with about 175 pips negative, thanks to that uptick that it had all in the past week. Now, the only thing I can figure out, and this was after digging very, very deep and calling in favors and actually calling people at in the London financial sector that I still keep a relationship with them from my days at Euronext. And they told me, and I don't know how much of this is true, but it does seem to make sense, that given that Trump and the American government in general are looking at applying heavier sanctions on Russia for that weapons deal with China, among other things. It looks like a lot of the Russian money fled out of Switzerland on fears that if sanctions and embargoes are put in place, that money would end up being trapped in Switzerland. So the money got taken out. That made the Swiss franc weaken as the money went out of the Swiss banking sector. And that is the best explanation I've been able to find on why the Swiss weakened this past week. Again, I don't know how true that is, but it does make sense, and it does come from people whose opinion and intel I trust very much, as I worked with them for years, and they are heavily involved in European finances. So take that with a grain of salt, but for me, it does make sense. And if this is the case, then that money has left, and there is no more money to be leaving the Swiss. So if anything, we should see it start turning around. I will still try to short this if I see a nice turnaround. I'm not going to be jumping in willy-nilly, but I do want to make those pips back. And well, that's about all I can say. So it's getting very close to the Ichimoku cloud, which would be the resistance on this pair. And if I see a credible bounce towards the bottom, I'm going to trade it, and that is a huge amount. A huge amount of pips. We're looking at about 300 and change from where it is right now to the prior low. So we'll keep an eye on that and look to be jumping back in and recover those pips that we lost this past week. Again, no one trade has the capacity to break us, simply because we're not risking that much on a single trade. Does a loser hurt? Of course it hurts, but it is not devastating because we know how to trade safely. And usually money we lose, and you guys have been long enough with us, you've seen us lose money and then make it back. So that is likely what is going to happen here, and likely even with the same pair. So we'll keep an eye on it and be ready to jump in on any significant movements. Aussie dollar. Aussie continues heading towards the bottom. Dollar continues gaining strength against the Aussie. That's been the case since January. We don't see that stopping at this point. So I have been jumping into the Aussie weakness train as often as I can, is when I see a good turnaround. So it looks like we're in the middle of another one, and it might be time to trade it back towards the bottom. And there's at least 200 to 300 pips there as well, probably closer to 200. So we'll be keeping an eye on the Aussie pairs. I'm already short on the Aussie CAD, so we are already picking up money on this one. The only one I'm trading in the opposite direction is the Aussie JPY, based on the technicals, because the yen seems to be weakening faster than the Aussie. I normally don't trade week against week, but it did give me a good signal, and I took it last week. The Kiwi dollar, much a carbon copy of the Aussie dollar, doing the same thing, and this is another one that we will be looking to trade towards the bottom on the assumption that it will make a lower low. Aussie Canadian, I already mentioned it, open trade. We did catch quite a nice chunk of that move from last week, actually from Friday. So we're already in this one. We're at profit, and we're in no rush to close it. As you can see, it is on its way to making a newer low, or in fact may have already made it. I haven't looked at the chart since the market opened, but the Canadian gapped. It gapped significantly across all the pairs, and it may have indeed opened at a new low. So I'll take a look at that later in the evening as I start looking at possible entries for the week. But indeed, this one is on its way. If it hasn't already, it's on its way to make a lower low, and we'll continue riding those swings as they happen. Euro Swiss, same thing here with the Swiss. It did go in reverse thanks to the alleged Russian money fleeing Switzerland. This one was moving a lot more sideways than the other pairs, even since before. So sort of a predictor of what was going to happen. We weren't in this trade. We'd actually made some money on this one earlier in the week or the week before, so we didn't get caught on the wrong side of this one. Much like the USD Swiss, it is also at a nice level of resistance, and indeed, if Swiss strength returns to the market, this one will probably be heading down as well, and we'll be keeping an eye on that. Okay, and Euro Pound, this is another of our open long-term trades. It is negative, as I said, by about 100 pips right now. Not the biggest deal. We've got that covered elsewhere on profitable trades, and I still believe that the pound will weaken against pretty much everybody, so I'm not going to be closing that trade. If it does hit the stop, well, you know my approach. Some of them do hit the stop. But I'm still looking at a higher likelihood of this one heading back towards the top and indeed adding another chunk of profit to our gain. Euro JPY, this one has also done a turnaround. I pointed this out several times during the week that I did not like the look of those long wicks at the top. It looked to be doing a turnaround, and that we would be trading it towards the bottom. So I will be looking for opportunities to do precisely that, especially if we get some nice entry signals and it starts heading towards the top of the channel, or even better, for the bottom of the channel, which if you look at the chart closely, the bottom of the channel pretty much matches the bottom of the Ichimoku cloud. So that would be a natural stopping place. But as you can also see, many times it does overshoot, and it does have a bottom, a level of support right at the bottom of the chart you're seeing that has yet another nice large amount of pips there to be had. So another interesting pair, but again, we'll wait for the right signals. It was very iffy on Friday, going in both directions before essentially closing at the same price point as it had opened. Euro Canadian, again, the Euro CAD has just dropped to, but it just can't drop anymore, but it will. So it is making those lower lows. If we have the Canadian news come out positive on the trade agreement on top of rising oil prices, this one will probably head towards the bottom of the chart again, if it hasn't already, based on the gap at the open. I apologize, I haven't looked at the charts yet. I normally don't do that till later in the evening. But I do know for a fact that there was a significant gap simply because of the profit level on our open Canadian trades. I know where I left them on Friday, and I was pleasantly surprised where they are right now. Pound JPY, another pair overdue for a crash if we have pound weakness come back into the market, with a caveat that the yen has been weakening as well. So this one may not move as much as the other pairs do when the pound gets a little bit of bad news on Brexit or the leadership struggle in the UK right now, but it should still drop. Maybe to the Ichimoku cloud, maybe to the top of the channel, maybe even beyond. But this is another key one that I will be keeping an eye on. Aussie JPY, this is the only yen pair I'm trading into yen. I'm sorry, I am trading this one, Aussie JPY. No, I'm sorry, I'm trading this one into yen weakness as well. Yes, into yen weakness, but more importantly, it's trading into Aussie strength, which is against all my other analysis of the Aussie. But the explanation on that is that the yen is weakening faster than the Australian. So we are long on this pair. We're at profit. I think there's profit protected already. And we'll continue riding it so long as it keeps going up. It may not move as fast as some of the other pairs on account of Aussie weakening at the same time. And you know I don't like trading weak against weak, but this one just gave me a pretty good signal, so I took it. Euro New Zealand, this one has faked this out a couple of times. I've been trying to short it, but when I short it, it just pops up, hits my stop, and then drops. So I'm going to be a little bit more careful trading it. If I see a good opportunity, I'll take it, but I am going to be putting a pretty wide stop. You have to be able to risk money in the Forex in order to make money. If you make the stops too tight, and this one is a pair that obviously requires wider stops, even when you're right, you're going to lose money, and that really sucks. So this one, I may indeed trade it again, but I will be giving it more room to move if and when I do. Pound Canadian, we took a chunk of pips out of this one, I think last week as well on the Canadian drop. I'm sure it's gapped even lower, but it is very close to the bottom of its trading range, and it's going to hit several levels of key support along the way down. So not sure how much this one is going to move. Obviously, I do expect pound weakness, which we haven't seen yet, but should be coming back, as well as CAD strength. If all that plays out, this one's going to drop like a stone. But until pound weakness comes back into the market with a little bit of, I guess, consistency, this one is going to be a little bit of a more dodgy pair to trade. So we do have the open trade that is carrying a crap load of profit. There's no gentle way of saying it. And we'll continue writing it in that direction. But we have to be also aware that it will hit support sooner than some of the other pairs. I've already been protecting profit as we go along. 225 pips are now protected on this pair. And I'll continue keeping my stop loss about 50 pips behind. I'm not going to put a trailing stop. I want to be able to adjust it manually as I see fit. But if you do a trailing, I think 50 pips is about the right distance. And that is it. That is it for the charts for the beginning of the week. Any comments or questions on the charts? Okay. That is very good. Then I will move into our setups in progress, and these are the key things that I've seen in the market, not just from last week, but the news I've been reading over the weekend and my, best analysis. I don't pretend to be predicting. I don't know everything, but I do pretty good. So this is what I see in the market right now. The USD is still in the crosshairs of the news cycle. So there's a lot of stuff going on here internally with the government, externally with the trade wars with China and pretty much everybody else. A lot of stuff going on, and that is going to impact the dollar. So you can see the dollar whipsawing up and down as news comes in. But we do have some strength being pumped into the dollar thanks to the interest rate hike that happened last week. So there is bullishness in the market towards the dollar. And of course, do not forget U.S. non-farm payroll at the end of the week. The euro. The euro is ambivalent. It's been going up and down depending on the pair due to several things. The banking sector weakness in Europe in general, Brexit, which will not only affect the UK, it's also going to affect Europe. So the fact that Brexit news is bad for the UK doesn't mean it's automatically good for Europe. Both of them are going to take a hit. And there's a few other issues going on between the euro and other places. The Turkish lira has also affected the euro to some degree, not because they're part of the Eurozone, but because the banking system is pretty interconnected. So the Turkish disaster with the lira earlier in the month has affected the euro as well. The pound pairs, I still think there's stormy weather ahead. We have a key Tory leadership vote coming in this week. Tories are the equivalent of the Republicans in the UK, so they're the Conservative Party. They're the party in power. And this week, there's pretty much going to be a leadership, there's going to be a conference where they're going to vote who's going to be the leader of the party going forward. Likely, Theresa May is on her way out regardless. I doubt she's going to be standing in the next election. The election, I think, is scheduled for 2020. Of course, the British have a different system. They can actually call an election whenever they want to. They simply vote that they want to have an election, and they'll have it in a week. So it's not like here where it's every 4 years and you can't call a special election. If they have a confidence crisis and the prime minister is ousted, that will immediately call for a new election. So that's in process. Brexit, of course, no need to mention that. It's going to be weighing heavily on the pound, and in general, a lack of anything positive. There's really nothing positive coming out of the news cycle about England, other than that, well, they're still there. So the pound strength that's been coming into the market in the past couple of weeks is perplexing to me. And when I don't understand something and I can't find a reason for it, I tend to trade in the opposite direction. Because instead of thinking I'm missing something, I think the market is simply diluted. And when it comes to its senses, it'll do that with a vengeance. So I'll be looking for opportunities to continue shorting the pound as much as I can, but also as safely as I can. Swiss pairs, of course, I've covered this. The Swiss weakened unexpectedly this week, apparently due to the Russian money being pulled out. But the worst seems to be over. So I will be looking for yet another round of Swiss strength, not necessarily this week, but eventually. I don't think it's going to weaken much further. And if anything, it's going to give us the opportunity to trade it back down. So we'll be looking for that. And last but not least, our CAD pairs. Again, not going to repeat all this to any detailed level, but oil prices are rising. And we're still hoping for an imminent 11th hour trade agreement with the U.S. I'm looking for a strong CAD if this plays out, and it looks like it will play out. So those are the key setups I see in progress for the week, not only for the week, but really for the month and then maybe even for the rest of the year. So we'll be keeping these in our back pocket and looking for good entries in those directions. And our final words here, and this is in light of the trading results over the past month. Trading successfully often feels like you're just hanging out, not doing much. You're running only to stay in place. But the secret is you got to show up every day, because making money in the Forex market relies on having home runs. You want to have those magnificent trades that add 300, 400, 500, God willing, 1,000 pips at a time to your account. When you have one of those, your account can easily double in size. They're that impressive. And that means that if you have home runs every now and then, you can afford to be flat for a while. You can even afford to give money back to the market at times without it crippling you. Do not overtrade your account. That means don't over leverage, and don't make trades for no reason at all, just to be trading. Make sure you always have a reason to be in a trade, but the most important thing, show up every day, because you never know which day is the one that's going to give you the home run. This is a game that you're going to win by being consistent and having discipline and, of course, trading your plan. And that's it, my friends. That's the end of my start of the week, and I'll open the floor for any comments or questions from anyone. Well, I'm glad everybody was clear on everything. Then thank you so much. As always, I appreciate you guys showing up, which was the last slide. Show up and good things will come. And I'll be releasing the schedule for the fundies this week, but you already know it's going to be Tuesday with the Aussie interest rate decision. And then we're going to be doing our Super Friday morning with the non-farm payroll out of the U.S. and the Canadian unemployment and employment numbers coming out at the same time. So thank you so much, and I will talk to you guys tomorrow.